Hello, investors and traders, and welcome to the Midweek Report. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. We're coming into the final minutes of today's trading session on this Wednesday, June 4th. And as you can see here, we have that little red candle. Let me magnify that for you. Right at that resistance, which is taken from the highs back here in March. The resistance held again in May. The red candle on lower volume at resistance tells us that the buyers are pretty weak at this particular point in time. We had I would say, a non-eventful day with the exception of some of the financial numbers coming out today, which I'll get to in a moment. We really have very little range. And so the drop in volume at resistance, take a look down below. What do you have? That's the CCI. I've been talking about that for weeks on end. That is a hinge. A hinge is when it goes from one direction, starts to change to another direction. A full-fledged pivot is when it does an about face and it reverses and goes the other way. So we don't have the pivot yet, but that hinge is telling us that the buyers, again, are losing some of that upward momentum. As we're coming into the close, you can see that on the minute-by-minute chart, we are pressing new lows. There we go. We're still selling off in the final now 2 minutes, and that is DIA. If you look at IWM, you're going to see the same thing. Selling into the close. On the daily chart, you can see that we have another very small candle. Let me magnify that for you. There you go. And that is on lower volume as well, right at that key resistance point. Down below, you can see the CCI once again is hinging, and that's a direct result of the lower volume and the average price of the high, low, and the close. That's known as the typical price. I think I talked about that 2 weeks ago when I explained the formula for the CCI. But the average of the high, low, and close is known as the typical price, and it's thrown in there in the formula to give us that indication of a change of momentum. And again, we're seeing that change taking place right now. So I still have my downside targets in place. I don't really have to go through each and every one of them because they're not moving. See the dotted line right down there, 175.81, going back to DIA. I guess I'll repeat it in case anyone missed it. 368.12. Moving on to the Qs, you can see same thing. Drop in volume on the way up. Small little spinning top candles. Hinge, almost a pivot on the CCI right down there. And that is also a negative divergence. Let me talk about that very briefly here. If you look at the CCI, you see the high is lower than the previous high that we saw back here mid-May. But we have a higher price high on the candles. When you see that, you got to watch out below because it's, again, telling us there is a very big drop-off in the momentum, and you don't want to be long when you see that. In fact, if you are long, the best thing to do is to protect any profits that you might have and make sure that you don't turn winners into losers. So downside target on QQQ, 417.67. Moving on to SPY right here. You can see, again, another very small spinning top, almost no body, but that is a red candle on a drop in volume right there. CCI showing a negative divergence. Stochastic showing a negative divergence. You got the hinge on the CCI. We're coming into the final 8 seconds here. Downside target is 497.97 for SPY. And there you have it. The markets are officially closed on this Wednesday, June 4th. Moving on to VIX, you can see that we're on a key support level, and we have this small little body candle with the stochastic at an extremely low reading in the oversold territory, and we have a positive divergence on the CCI. You see that? Positive divergence is when you see higher lows, but equal or lower lows here. You don't have to go right to the penny. Just understand that that's almost equally matched at that support level, but look at how much higher the low is on the CCI. Now, we as option traders have a UVXY position Now, this was featured as one of the trades of the week, and this one still continues to be a good one. If you're interested in learning how to trade the VIX and using ratio spreads, if you're even a beginner option trader, you can come on by and sign up for our free membership so you can plug into the Sticky Trade University courses. We have a wide variety of topics that you could learn about. We have it set up so that the learning experience is very fun. There's videos attached, there's test questions and quizzes that you can go to test your knowledge. And we make it a good experience, a fun experience. We don't make this a cumbersome process. We want people to be able to learn and retain what they learn. So if you're interested in learning how we put that spread on, you can come on and sign up for the free membership. There's no strings attached to that. We talk about that almost every week. Now, talking about the economic news that came out today, take a look at the ADP non-farm employment change. This is a dramatic miss, folks. The forecast was 111,000. The previous number was 60,000. Came in at 37,000. That's dramatic. And what this is, basically, it shows the estimated change in the number of employed people during the previous month. So this is giving us a snapshot of what the workforce looks like. I guess you could say it's related to the unemployment numbers, but it shows production. It shows what's happening with regard to economic growth. If the economy was growing like gangbusters, you'd see more people being employed because the companies would be more active in recruiting, but we're just not seeing that. And you can see even the headline down here, this is the weakest ADP since March of 2023. So go to forexfactory.com and you'll be able to track these numbers as they come out in the morning each and every day. And then you could expand to read into the report. It'll help you really understand what's going on here. And each and every day we got different numbers coming out from various countries, but you could see what's happening around the world. And right here, you even had the ISM services PMI, which came in shy of the forecast here and even lower than the previous report of 51.6. So as I've said many times, I'm still playing it to the downside. We do have long positions that we trade in and out of, but overall, the outlook for us in our positions and how we're set up with the option deltas, we're overall negative delta. And so this is a great market for option traders. It's not so easy for investors because the buy and hold folks, I think, are getting a little frustrated here. But we had a question come in from one of our YouTube viewers, and I want to address that. It comes in from Boston Beans 6609. Question is, in the coming midweek report or Fridays, please add an assessment on market breadth for each index or in general and see if volume would support assessment. Well, you have to understand that each and every week, when I look at, let's say, DIA, for an example, I am looking at the candle and I am analyzing volume. So the volume, as I often refer to it as a leading indicator, is exactly that. It's not a lagging indicator that some people might think. Volume gives us the force behind the move. Now the volume is dropping on the way up, so that's not good market breadth. It's not a positive market breadth. But if you take a step back and look at the weekly as it's hitting resistance, well, guess what? Same thing is happening. The weekly volume is dropping, not just on DIA, but right across the board. Look at IWM. Weekly volume is dropping. Look at QQQ. Weekly volume is dramatically dropping. And the same thing could be said for SPY. Now, we only have 2 trading days left in the week and can obviously see that we're just about halfway in the volume of what we saw last week. And the oscillators are starting to turn on the weekly indicators here. So the overall breadth of the market is not pointing to the upside. And again, if you follow our trading checklist, Volume is the second point on the 7 points that we track. And that's how important it is. We look at price first, we look at volume, and whether or not that supports the price action. And if it doesn't, then guess what? We have to adjust and or close our trades to match what we're seeing on the charts. Folks, thank you so much for watching our videos each and every week and liking them and commenting. We're doing our best to get those algorithms to kick off. And as I said last week, I scratch my head wondering how we don't have 12 million viewers here. This isn't entertainment where you're trying to learn how to bake a cake and maybe prepare some fancy dishes for your guests that come and visit. We're showing people how to make money, and on YouTube, we're giving away for free. We are doing our very best to put out the content so you come along with us for this wonderful ride trading in and out of the markets, especially you option traders out there. So again, have a good rest of the week, and I'll talk to you on Friday. So long.